I have no clue. Okay. I guess it's working. I really don't even know. I really don't even know. That's the craziest part. Let's see. Oh, I'm hurt? You can hear me? Okay. Yo, this thing is so complicated, man. I don't even know how bad the lag is, too. But I guess it's okay. I already know there's gonna be a delay, because like on Discord, there's no delay. When you type in chat, I see it in real time. Like when you're watching this stream on YouTube, I know there's gonna be like 20 seconds, 30 seconds, maybe even up to a minute. I don't think a whole minute, but it's gonna be like a little bit of a delay for some. Good morning, Romelli. Yeah, this is new. Anyway, man, trying to set this thing up, missing the short that's being triggered. So let's see. Yeah. Um, clear divergences between the two pairs. This is this is US30. This is NAS. So basically, this is what we have. When will Ty start teaching on Discord? Um, it's a good question. I think Tyrell is busy with life. I know he just got a job. Um, so and he's still working on developing his PDFs for his course material. But I will start teaching my interpretations of what he has taught me. That's for sure. I already talked to him and cleared it, and he was like, "Yeah, like it's not exactly the same approach. It's the same concepts, and I have no problem with you teaching it because the thing is like, um, the thing about Tyrell is if you think you're gonna learn from him or learn his strategy or his method, you won't. You're gonna learn his concepts, and then he's gonna leave it up to you to try to figure out how you would decide to apply them. That's how Tyrell works. So quite different. Um, there's a lot of different ways to look at this. I think what I can do is just be like, all right, what took this out? That means this candle. We've already gotten tapped in. The short has already triggered, so um we missed the best entry for sales on NAS. We would either have to wait and not chase the trade. It's already triggered up here in this area, so that's fine. Let's think of it this way. We might can justify. That's the overall idea. Hey, what's up, Zeke, bro? This stuff is so complicated to set up, bro. I'm not even gonna hold you. It's so easy to just start streaming on Discord, man, or even WAP is so much easier for me. Like the way this stuff looks, streaming, getting it set up, descriptions, then I'm connecting the OBS software. I'm streaming through that. So then I gotta go through OBS to change my stream screen. Now my battery get all right. That's cool. I'm just complaining. I'm just excited. It's different. That's all. Yeah, I have a bias for NAS to sell off. This is the first sign of like pretty nice bearish price action that we've seen even with yesterday. I thought it was gonna sell yesterday, and I mean, and it did, but it wasn't the sell. And now seems like okay, this trend is exhausted. All we've done today is uptrend, so we're trying to correct. New York session has not hit yet. News has already come out. Um, this entry is definitely early and premature, right? I'm on demo, just doing tape reading. But for more of a long-term type of play, this would be the idea if you were trading Forex, right? So risk to reward would be something like that. You would be looking at almost a 1 to 10, about uh $200 risk or so for about like it's almost about a 1 to 10, 1 to 8 type of risk to reward depending on what price you get filled in at. But we'll see what happens as the session opens. We do have a gap in the market right here, and it appears as though we only tapped into it once, which means that now this is gonna become liquidity. In what region? About this region right here. So I would probably be expecting price to deliver at some point a resweep, and then this is going to be the ideal entry to execute for shorts later. Then your stop loss will be a lot tighter, and that would be a really nice trade. Um, the concept behind what I'm examining here is just understanding that like price moves from areas of balance to areas of imbalance. And the best way that I can define what an area of balance is in simple words is just anywhere where you have buying and selling interacting in the same area, right? However you choose to define it. So before we broke this low where we had a bullish candle, buyers and sellers were interacting, right? Going back and forth. There was nice exchanges of trading going on. Then once we broke this low of this green candle, red, red, and then the next area of balance was an order block here. Then it created another one. Well, this order block got swept. Great. However, the, the range here, it did not fulfill 50%, and then it's only been swept one time. Yes, this does usually elicit, you know, this response that we see, but in order to see the move that we would like to see, which is that move for price to sell, like sell down here, it's just this idea that market cycles have to complete, and the market cycle here is incomplete right now. Price needs to technically get into premium territory, 50%, that dotted line or higher, and we need to resweep this first initial test inside this area. Um, so that would be the idea. Depending on how far away price goes, if we get bullish signals, we could take a quick scalp, but this is the overall bias. Um, we see the trends that were currently being uh, the current trends that was happening overnight, those are kind of getting exhausted. We were making overall higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Now we're making lower lows. Potential overall lower highs can be put in for price to come down. Um, It is Thursday. So, right? Yeah. So, okay. So then let's see. The week started down here, and all we did was go up on Monday, go up on Tuesday, go up a little bit on on Wednesday. Now here we are Thursday. If we start thinking about market models on a weekly basis, you don't just go up Monday, Tuesday, Wednesday, Thursday, and Friday. One of these days needs to retrace. So we've gone up Monday, we've gone up Tuesday, we kind of did go up Wednesday, but we didn't come down. We didn't print any sort of red day. We opened here, closed higher. We never even broke below the low. There has been no pullback at all this week as far as the trend is concerned. Um, so now that we're going in towards the ending parts of the week, understanding that there's just areas we need to come down, gravitate to, fill imbalances and gaps in the market, it makes sense to naturally develop a bias to want to start to short the market as we near uh, Thursday and Friday. So I'm thinking today we're going to get a nice sell-off. I think Friday, going into the trading day on Friday or in London session, we'll continue that sell-off. And then before, um, how do you call it? Before Friday is over, we might correct this sell. So what I'm thinking, we sell, do something, sell some more, and then before Friday is over, we kind of come up and settle somewhere above this low. If it, that's kind of what my hope would be for the rest of the week. I did see something in the news about the ceasefire not being a ceasefire. I think there is still war taking place right now. So I know the stock market started to rally on the speculation that Trump caused a ceasefire, but bombs were just dropped like 5 hours ago again. Um, so perhaps that's going to start to redirect uh, U.S. market sentiment. We'll see. So yeah, I'm not keen on taking any shorts here. I know we're at relatively high prices, but as far as this goes, we would be selling at lows or near the relative low prices. I would want to sell high. So I would want to wait for New York session, some sort of bullish momentum, something that's gonna tap me into a trade after price correction to the upside. So that's NAS, US30. Um, I had shorts from up here, so there's nothing new here. This trade, it came back to the same areas where trades were triggered yesterday. Um, the idea is similar to NAS for it to sell down into some lower areas to give us a decent retracement. However, they did deliver us a retracement that NAS did not deliver. So NAS sold off from a higher price that it made, but US30 sold off from a lower price that it made. So US30 is more weak. It's actually more inclined to sell than NASDAQ is. Um, so we'll see how this pans out. These same levels seem to be being respected today, which is actually a really nice sign. That's something that we love to see. Actually, an entry looked like it might be coming up pretty soon. Definitely still want to wait for opening bell, but yeah, this looks possibly sort of ICC, price breaking this low. If it fails to break and close above these highs, if these highs are protected and price starts to fail, that might be a good, this might be a good sign, a good area to continue shorts to the downside. So we'll see how that pans out. And then, yeah, do you guys want me to go over any Forex pairs? Are you guys looking at currency pairs? What currency pairs? Gold. Okay. Oh yeah, I ain't even gold. Of course we should look at gold. Wow, I'm tripping. Okay. I haven't looked at it at all this week. Let's take a quick peek. All right. I'm on a 4 hour. Notice how like, okay, I don't waste my time. This is me. I don't like going to the daily. I don't know. It's like, okay, it's a daily candle. Um, but 6 hour charts, this is breaking the day down into quarters. Clearly looks like bearish price action is trying to trigger. High, low, and then we had a slow trend up. Did we ever break above this high? We never did. So that means sellers are being completely suppressed at this level. No, I mean, no, buyers, my bad. Buyers are being completely suppressed right here. Okay, so now what do we want to know? What started this uptrend? Or what led to that growth? And that is this range here, which makes sense. So that's why buyers accumulated off this area. All right. Now, so sellers are in control from up here. And as far as the trend is concerned, this is the lowest low of this uptrend. That's what we need to break. And if we break and close below that, that's going to violate all of the buyers that exist above this price. So now, okay, so right now we're just roughly chilling between this area where sellers are strong and this area where buyers are strong. This is the halfway point. And now we're going to drop down to a 4 hour. Let's see. Did they start a downtrend? Yes, they're downtrending, but they didn't violate this trend just yet. So we got to see what's going on in here. All right. I'm going to mark out a couple points that I think are important. I'm not going to go too crazy. Drop down to the 1 hour. Sellers are trying to suppress people here. There's an incomplete range up here too. All right, so I'm thinking at the moment we're making bullish price action, high, higher low, higher high, potential higher low. I see an incomplete range up here. Just I'm marking this out very rough. I would have to go down to a low time frame to refine it, but it looks something like this. Okay. And I would be probably anticipating I'm bearish overall. It's just that until it can prove to me that it is breaking. Okay, yeah, they were overlapping. Until it can prove to me it's gonna break this specific low in the market, I'm not gonna really take any major sells. I'll go ahead and make this line like yellow and very thick, so it'll overlap and we can see it. Um, because this is the lowest low of this whole trend that's holding this market up. So a break and close or some price action as we're breaking and closing below this level is going to be a more guaranteed sort of play. Or not guaranteed, but a more safe trade as opposed to taking something that's not at one of those crucial levels. So I am bearish overall, but usually when I'm bearish, it means what we buy low, sell high. So I'm inclined to look for a higher price to sell if I want to get into a sell. That's why I'm trying to identify where does it want to buy to so I can sell it. And what I see is I see that this is a very strong interaction right here. But this is liquidity at the moment. Let me just go ahead and refine down and find this zone so I can stop yapping for a minute. Well, let me go to the 15-minute. Get my bearings. Okay, right here. There has to be. So what am I looking for? Trying to find my area of balance. This right here kind of looks like an area of balance to me. What does that mean? There's buyers and sellers interacting inside this range. But however, once we break below that range, we have no more buy and sell interaction. We just have sell, 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 sell. So that means that the low of this box is the beginning of my gap in the market. Then I'm going to bring it down to where I have my first buy candle. So now I've just marked out in my mind what I would call a true gap. I'm going to adjust it a little bit, not up to the bullish candle specifically. I'm putting it up to the swing level. If you guys remember swing points, I'm putting it up to the swing of that region. This just so happens, the bullish candle so happens to be the swing of this region. If I zoom into it, you can see that the candle's wick is higher than the one on the left and on the right. And this is how precise we're being about our rules. So this is my incomplete range. As on the 15-minute, it's gonna look different from time frame to time frame. If I go inside, what do I see? On the 5-minute chart, I see a very nice gap that's resting right below that 50%, a very nice order block resting right on top of that 50%, looking like overall that this is going to be some generally good territory for a trade to be executed. That's all. That's just looking like good territory to execute a trade. Anywhere between the range of the order block and the bottom of the fair value gap on the 5-minute. That overlaps roughly about the middle halfway of this whole area. So that's what I would be looking for. A high probability area to enter into shorts. Am I gonna take buys? it might be triggering like right now. The entry would have been in this area. And yeah, I mean, I don't know. I don't do with that information what you will. It feels like price is reversing. We still have a whole 4 minutes to go. We still have opening bell. If we could create an order block here, a bullish one, that might can be reflective of price going to the upside. We'll see. So those are our two scenarios. And in my head, sell up here or wait and sell down here. The 50% of where sellers are in control compared to where buyers are in control also rests in that area. So yeah, there's a lot of synergy. There's gonna be a lot of selling pressure being triggered up here, if it makes its way up here. So this is definitely my high probability area to get into a short. If I see any price action or any candle rejections and stuff like that, double sweeps of liquidity, this is gonna be my major sell area. All right. USD JPY. Let's go back to NAS real quick. All right, it's moving as expected, right? You see the line we had drawn? So like ignore the trade. The trade don't matter. Actually here, I'll go ahead and close the trade and well, I'm leaving it open just in case I missed the entry, but as expected, price is moving up to this area of liquidity. As soon as it closes above this level, technically what we're looking for has been fulfilled. Like it's gonna hit 50%, close above this liquidity line, and when it comes back and starts to sell back below, odds are going to be quite high for a bearish reaction. Then that bearish reaction just might possibly turn into a really nice trade. Um, Opening bell is in about a minute. I'm probably not gonna switch to UJ at this moment. I don't even know what I was looking at on here. This is super old analysis. Uh, okay, it looks choppy from a higher time frame perspective. We did have some pretty big plays to the upside, but we sold off a lot. Not really too keen on what's gonna happen. I would probably look for just like a short term setup and mm, yeah, I don't know. I'm going to head back to NAS. Is this gold that you were talking about? I'll just recap it. NAS thinking it's going to go up uh, and fulfill sells in this area, and then gold, I'm thinking it's going to do something similar or just go down to this key level um, and just wait for shorts there. So it's either we get into really nice sniping entries or we wait for price to come down, sell below this and take sells. Or we'll see if either of these two scenarios play out. But I'm probably going to keep eyes on NAS because that's what's going to start moving right now at this moment. Opening bell is in now, pushing up. This, let me see, did it? I don't have actual futures data, so I can't see if this high got swept legitimately or not. The price feed might be different. See, if I go back to futures, I'm like 10 minutes delayed, so I have to purchase the data. All right, we're pushing up. So if I wasn't in my entries, which let's just go ahead and try to simulate that. Bro, why is it's lagging? Anyway, that that's the fill. All right, just closed. This would have been the fill I was just trying to get if my MetaTrader, or not MetaTrader, TradingView didn't just lag. So let's see. That's unfortunate. There's some other creative ways to enter into this trade. Let's see. We have the candle that swept the liquidity. We could put a line right there, and we can wait for this bearish candle to close below and then get in on a retest of the open. So since we missed, or no, well, I was pushing back up. I'm gonna just execute an entry in that zone, and then if it plays out, that'll be great. Stop loss would have to be for these type of aggressive entries with no confirmation. You put your stop loss has to be above the swing highs. Um, if you get a really solid fill or you want to trust it and just tighten it, you can put your stop losses, you know, a little tighter, something like that. But yeah, I'm pretty sure. Let me see. If I was a seller, what would I not want to happen? I would not want I wouldn't want this to get broken. Even though, yeah, I wouldn't want that to get broken if I was a seller. So I'll put my stop loss there. And wow, look at the entry, guys. That's crazy. Now, if this was futures, which we're gonna simulate, maybe, I don't know. Let's see. What? Um, yeah, no, see, so it's gonna fill me like where price currently is. It's weird like that. Uh, okay, that's actually good to know. So then that way going forward, I could just use this to do my charting and then execute a mock trade. Once I get the data, then I don't gotta do that no more. But yeah, that would have been a lot of bread. You know what I mean? Just already right there on that move down, you're done. And not only are you like, I mean, you're up like bands. It's also a pretty decent fill, considering we got the reaction that we were looking for. The likelihood of the market continuing to sell off a little bit more if you have some patience and some gut to take that trade down, then you could potentially have just gotten into something that could look like this with your stop loss up here, but how much drawdown did you really go into? Potentially, like none. We're already talking about like a 1 to 37 RR. You know, and this is hypothetical. And then if market continues to sell off and you hold and snipe, you get this crazy, insane, like 1 to 100 type risk to reward ratios. And this is like why I'm saying it's like 1 to 3 Risk to reward is great, but that's what they call mastery, right? Um, a 1 to 3 RR with a 50% win rate. Just on the initial drop alone, where the moment I put the entry, boom, stop loss, let's just say on the other side of the gap, and then how far did it drop? Just on the initial impulse, we're already looking at a 1 to 6, almost like a 1 to 6 RR, right? And we're only 5 minutes into the session. It's only been 5 minutes. So for people who wonder why, like, hey Romel, why do you like try to overcomplicate trading? Not that I try to overcomplicate trading, I just try to learn how to read at a very high level. So my comprehension is better than the majority of traders that trade. Because my comprehension and what I understand is better than the majority of traders that trade, we just got into this short. I called it out, I marked it out, I drew it so people, now it's recorded so people know I don't be capping. I don't go and draw the lines after I call a trade. It's playing out just like I expected it. That's 10 years of being literate. That's 10 years of knowing how to read. So that's all. And it's like if I do all the hard work, then okay, how easy is it for a college professor to read Cat in the Hat? You know what I'm saying? Like, yeah, Floyd Mayweather can read Cat in the Hat too, but you know, it's like when the time comes and I need to read some important documents, Floyd can't do that. Same thing with as a trader is like I want to be so well equipped that even something that is hard to read is easy to read, let alone what's easy to read, you know? So that's still running. So now that that's running, let's go ahead and look at how US30 is panning out. Look at that. I thought these are supposed to be positively correlated pairs. That is insane. This is why I don't trade both. Because I usually only analyze NAS. And I'll usually just, I mean, a long time ago, they used to move in the same direction. At some point, that kind of stopped, like 2 years ago or something. So I don't do that anymore. I don't. Mm-mm. Like, why is one buying? Why is one selling? That's just weird to me. So anyway, just like that, like trading is done. Like, I mean, theoretically, I mean, not even hypothetically. I mean, theoretically, we're done trading. If this was futures, let's go ahead and calculate um how much money this would be so far. What we're gonna do is sort of simulate our position, and I know that where are we in from? Basically, the order block. We are in from about right here, and price has ran down to there. I keep switching tabs by accident. Price has ran all the way down to here. So bet 558, 503. So that's just, let's just call that 55 points. That's a 55 point drop times 4 ticks per point. Each tick is $5 per tick on on minis. So that was just a quick $1,000 drop, I'm pretty sure. Why do I feel like that's wrong? No, okay, yeah, that is right. The math is right. Yeah, so that was just a quick $1,000 drop on one account. Then if you were copy trading on Top Step, that's a $5,000 day. Great. Now if you can do that two days a week, you're making $10,000 a week. If you can do it 5 days a week, guess what you just did? You just made $50,000 that week. Like we're done trading. Now everything else we're doing is like, you know, we're really done. But for the sake of trading and for the sake of like just the love of the game, we'll continue. But we're done, unless you want to just keep milking it, unless you see the potential, whatever your trade style is, if you're inclined to hold, if you don't have a reason to buy, why close your sell? So, it's up to you. But I mean, like, if you caught that, like this drop alone just covered everything. Let me see. Took the same trade, blah, blah, blah. How far are you looking for it to go down, if you don't mind me asking? Looking for it to go down quite far. If you go on a 1 hour chart and you just kind of look at, okay, from Monday, this whole bull run, I'm looking for it to go overall all the way down to where I'm basically looking for it to go all the way down to where it broke the high, just about somewhere in this gap, for just a myriad of reasons. I mean, yes, it is a fair value gap. Yes, this is also an imbalance. Yes, this is also a break of structure with no retests. Or in other words, this is also a indication that was given. And price didn't just break one high, it broke this high as well. It broke multiple highs and gave no proper corrections. So understanding that the market cycle has to complete, we need to sell to fulfill a lot of unfair fair value gaps or just unfair market movement. Sellers need a fair chance to correct the market to get out. I would be anticipating price to ultimately trend or crash. I'm not gonna say crash, that's extreme, but to like rip down to these levels before there's any more major market movement. And when I say major market movement, I mean like major trends being established that are going to last for a while. So that's the idea right there. I noticed at one point gold made the move before NQ. If gold dropped today, NQ would make a drop tomorrow. Never, I never really think of it that way. Um, just because they are different asset classes. I mean, one is a metal, one is the value of companies with money that doesn't even exist. Um, but I never really analyzed, I guess, per se, the timing of reversals between gold and indices. Um, all, all I would do is just do the same thing that I did with NAS. I think this is a very major area to take sells, very similar to how we just took sells on NAS. It should have a very similar type of reaction in this region. And then moreover, taking sells once price can close below an area that buyers have been keeping the market up at. So yeah, it's like, yeah, that gold question wasn't this year, it was last year. Oh, okay. And it didn't take no simple correlation. All right, for sure. For sure. I already know Zeke got to be up. Zeke, are you in here? Are you watching me? Are you doing your own thing? Let me see. Let me go on Discord. Thought when you have a funded, you can't get a combine once you're funded. No, that's that's when you are trading a live funded account. You can get up to 5 funded accounts to copy trade. All right. Um. Anyway, you go ahead and put post profits. Um, Analyzed and executed a banger live on YouTube. All right. Well, anyway, is there anybody in this trade? Like, did y'all take this? Probably be a little bit not cautious. I mean, it's just okay. Like, prices is gonna have to sell, then they're gonna have to buy and correct, and they're gonna have to sell and buy and correct. If you got some profit that you're comfortable with, take some partials, right? This is where we start talking about risk management. Like, what do you want to do here, right? If you have a trade that's running well into profit, there's absolutely no reason why we should continue to have a stop loss or give ourselves the possibility to lose some money. Put that put that stop loss back down to break even, right? Or put it maybe just a little bit in profit so then that way, okay, bet you're gonna cover your fees, commissions, whatever it is, in worst case events, you don't lose any money today. Great, right? Then as it continues to drop, which that is what it has just done, price has come and it's broken this low. And this is the reason why I'm putting weight on this low is because this is the first initial impulse of the sell program, in my opinion. Like the one that caused all of this bearish price action. This leg of selling is what we analyze to take this sell that we're in. So what does this mean? It means that if we've just broken it, corrected it, and we're continuing to sell off of it, any buyers that were in the market at this level theoretically have kind of been taken out. It doesn't mean that price can't come back up for a retracement to sell off again, but what it's just saying is that the likelihood, just the conceptual understanding of knowing that, okay, buyers in this area cooked, okay, like overcooked, they're burnt. So, and sellers are taking prices lower than a low that they've already put into the market. So they're in control. And if they're still selling at these lower prices and cooking sellers, I mean, no, and they're cooking buyers on the way down. I mean, look at all of the different, look at what's happening, right? Low hanging fruit. And every single one of these lows, there are buyers with orders and stop losses. With every point that price continues to sell, there are stop losses getting triggered. There are more and more buyers being liquidated out of the market. When you have nice clean trends that run up like this, and then you experience a lot of bearish pressure, exhaustion, this triggers something that I've learned over my years. It's called a low hanging fruit play. Let me go ahead and write that down because it's probably going to be something it's probably going to be one of the first videos that I make and upload to you. I might upload that video today. Actually, let me write that down. Low hanging fruit. I learned this from this guy's YouTube channel. His YouTube channel is Stacy Burke Trading. Um, he was like one of the only YouTube trade education people that I watched. And yeah, the idea of low hanging fruit just on a conceptual level. With every low that's made, there are buyers. Not every buy or not every buyer closed their position. So when we have the market coming down, if buyers don't reclaim, with every point that gets dropped, all of the stop losses below these lows taken out. That means buyers get taken out. These buyers get taken out. All of the buyers that accumulated in this area get taken out. Now what we've done is we've tapped into a zone where sellers were in control, right? Because look, this is a downtrend. Price was breaking lows. Buyers accumulated and broke this area where sellers were in control, and then they only made higher lows. Sellers never regained control of the market for real until like today. So now price has sold down to an area. This would have been where we take partials. Price buyers are getting back into the market. But we were taking price down to this area where where sellers once had control, but buyers took control. So that's why buyers are taking control again. History repeats itself. That's why trading is very easy. If you can look back into the chart and make sense of it and understand what happened and why, you'll understand that history does nothing but repeat itself. That's why we took sales here. Because why? It already sold here. That's why buyers are taking buys here. Why? Because it's the first time we're back at these levels. And what did we do? That's where this is where we got control of the market. Yes, we bought from here and here and here, but where did we take control of the market though? We took control of the market here. That's why we're buying strong. So it's understanding at what prices and why, and did the market flip. And once you can identify that, now you've just learned how to identify the price levels where you can get that sniper entry, that sniper entry. That's all you got. That's all you got to do. Everything seems so clear, but when there's nothing on the chart, it's not so clear. We don't know exactly why and where things are playing out the way that they are. So that's like why I'm here. I'm just here to bridge that gap and to teach and explain. But so anyway, this is to be expected though. And the crazy thing is this doesn't mean that your sell is over. This just means that okay, the market is doing what it's supposed to do. Buying low, selling high. That this now means somewhere in between where we're in the market and where buyers are in the market, there's gonna need to be a new area where buyers and sellers do some fighting and they try to figure out who's going to continue to have control of the market. Are buyers going to continue to make higher lows and higher highs and push the market up? Or are sellers going to successfully be able to suppress price somewhere in these areas? I'm not scared about what's happening because I already stated that this could happen, right? Yeah. I said, first of all, there's no reason for your trade to turn into a losing one. Put your stuff at break even. Now, all because we closed below this low, I had already said it doesn't mean that price can't come back up and then sell. Go back and play the recording. So that's what price is doing. And this is fine. This is the healthy correction that we need. If you're trading ICC, regardless of your time frame, 1 minute, 1 hour, if you see anything like this and you call this an indication to the downside and you think that this is a correction, this is not a correction. This is just rejection at the indication that's being made. Price didn't even go up to close above the wicks. This is not your correction. A lot of people will think it is, but it's not. This whole move down is the indication to the downside. Now we've getting our correction to the upside. We'll see how strong the correction is. I would be anticipating if I know what I'm talking about, like I drew this up here for a reason. These are the supply and demand structures that I would be anticipating sellers to continue to step back in at, right? So somewhere in here, it would be nice to see a lower high made. And this is the type of trading. So like I stated, like we would have been done on this first move down. This first move down uh would have been about, for my estimations, it's about like 1,500, at least 1,500, close to $2,000 per contract, just this drop. Now, like, price is corrected. If you have guts and this is your style of trading to get into aggressive entries, okay, bet. Now we're gonna try to wait and get into another entry, see if it's gonna continue to sell off later and you're gonna hold for the overall play. Then this is the type of, I'm not gonna say turmoil, but this is the type of stress that you have to deal with. And then now we liquidated. Why did my stop loss not get triggered? Do you see that? That's so weird. Do I not have a stop loss right here? Okay, that was weird. But anyway, educational purposes, right? So now, as soon as the market starts to do things like this, and what is this? Some things that I don't anticipate or things that I don't expect, that's when I'm done. I'm done trading. You know what I'm saying? So I was right and accurate here, but I thought price was gonna come up here and then continue to sell off. That's not what's happening. So now this is where I need to understand, okay, what is happening? Is the market still bullish? Oh no, it's just actually it's getting tapped in for another sell. Wait, because yeah, this bought and there's a SMT. The candle that took out, hold on. Let me think about the SMT divergence model. What candle took out the short-term high? What, or is it, wait, is it this? This is the SMT. It depends on which one we want to analyze. No, oh no, it's gonna be this. Yes, these right here. So we're getting tapped in, pause. We're getting tapped into trades somewhere in this region right here, either this line or this line. If we call this the short-term high that got broken, then that means this would be like the change in state. So then we would be getting tapped into sells again somewhere here. And if this is an SMT, that means that this is gonna be a protected swing high. Hold on. So now I'm just tape reading. I'm just testing stuff um, that I'm trying to also learn. I think this is a protected swing high, meaning that this high should not get broken. So I'm just trying to figure out where the entry is at. 15-minute. Let me look at it this way. It's so strange. I don't know what I'm looking at. No, yeah, this is probably another sell. I'm gonna test it actually. Actually, wait. I'll go ahead and test it here on NQ since now I know that. Right, so it's gonna enter and execute me up there. Just okay, cool. But let me test that. This is some SMT ICT stuff. Um, I don't like the dip, but according to what I've learned, this should this should sell. Yeah, especially if from the 5-minute perspective, this rate, I don't know, because this is sweep number one. This is sweep number two. It doesn't usually sweep a third time, but we'll see. I suppose there was order blocks that we didn't test up here. I'm just trying to understand the market cycle. I knew that it was going to sell then, but I didn't anticipate that it had to come higher to continue to sell. So I'm just trying to see like what was my oversight? What did I miss? Because there's a reason why everything happens. If it's not a technical reason, then okay, whatever. But if it might be news, I don't know if some news just came out. I don't have a news feed to watch. But let's see like what happens in here. Actually, okay, let me stop drawing stuff. Let me be accurate. This is the high that got broken. Bro, this should rip from up here. This is the one I was really thinking it was gonna tap. It did almost barely. Yeah, got really close. It's like one of these two prices. I don't know which one. It would be this candle. If I mark this high, if it was this high, then it would be, well, no, it would be the most recent short-term high. That's not the most recent short-term high. This one is. This is the last high that was broken before the S&T was finished. So then this is where we're taking our sells from. Our stop loss would go above this. Our stop loss theoretically should never get hit if this is a valid setup. Liquidity just got swept again. We're going to see how this one plays out. It's interesting. And the reason why is like I'm not scared to take this is just because I've been learning some really high level concepts, and then also I still have the same basic understanding of like, bro, the market has to come down here anyway, right? So I'm not tripping like crazy. Then on it's like, okay, great. I'm getting into a second entry, taking the same trade twice in the same area. So I already know how strong of a sell area this is. Now I see a second reason to take an entry. So we'll see how it plays out. The only way this doesn't play out is just if buyers completely reclaim the market, but this is looking pretty nice. It wicked off the bottom of this order block up here, this 5-minute order block. This is looking really good still. So yeah, it's like the way I trade is like crazy. The original entry stop loss would have never gotten hit. It only really got hit because it was, break even. But it's just like, okay, most people would have seen something like this and would have been like, let me completely change my whole bias to bullish. You know what I'm saying? Like that's what we need not to do. Depends on how you're trading though. If you're trying to get in and out, you're scalping, trying to make your buck, your quick buck, then do that. But if you're looking for the overall narrative, the overall play, don't be so spineless. Don't be crazy spineless in how you're going to approach the market. You know, um, hold on to your biases as long as they're rooted in objectivity and what's true and not what you feel. You know what I'm saying? So yeah, we'll see how that plays out. Let's go look at gold. See, gold is still playing around. It ain't doing nothing for real at the moment. It's trying to accumulate to buy. So we could potentially see, I just have issues. Like if I was gonna buy gold like this, I would have wanted to buy it right here. You know? I have issues buying gold close to just any sort of gap in the market or anything like this. Like, um, even if it is ICC on a 1 minute chart, let's see, because we got a break there. Well, it's contraindicating, meaning that we got a break to the upside and a break to the downside, but we know that this is more so manipulation. It even printed a W, a double bottom, tap, tap. So now we bought up, closed above this. This is the retracement. We can draw a fib. We bounced off the 618. Everything's looking pretty healthy. you could press the buy. Well, that's way too many. Could press the buy button. Okay. All right. Could press the buy button on something like that and then take it up. Take it up to, don't be ambitious. Don't be trying to go like deep into gaps. Once you identify a sell area, you take your buy to the bottom of the sell area. And sometimes you don't even have to take it to the sell area. You take it to a piece of structure that needs to break before it gets to the sell area. You take your portion, you get out, then you wait for the next setup. You know what I'm saying? It could go up here. It could go up here. We know it needs to go up there to take our sell, but we don't need to be buying it into sell territory. It needs to break this piece of structure. In order to get there, resistance might spark here. Then we get a pullback that you just weren't expecting. It's like so don't be overly ambitious. This is not a trade that I would take. I'm just demo trading it. So this is not a trade that I would tell anyone to take right at this moment. Um, Depending on how aggressive I was being, I might would scalp this, but I wouldn't be like blindly just, oh, I'm enter into this buy because I'm overall bearish anyway. Not every gap has to get filled when I want it to get filled. That's what I've learned. So I want this I want this area to get filled so it can sell, but this area could stay here and price sells. Then it comes back to get it way later. So it just kind of depends on how the market's gonna go. You never fully know. This is in profit still. I think this is still gonna sell off. What's going on NAS? We caught a good initial impulse at market open. Now prices corrected the entire impulse. Does bring forth a little bit of concern, but based on some ICT principles, I feel like it should continue to sell. Um, if you know about SMT divergences, then I don't need to say anything else. But I am very new to the concept, so my trading is done for today. I'm just still live streaming, you know. But yeah, no, this is a 5 minute. Well, what time? We got a minute and a half. This looks like a bullish order block. I don't know. I'm thinking it's gonna sell from this area again, and just at least bare minimum, like it's not gonna go and rate this high. But I could be very wrong though. So I'm just forward testing something right now. USD JPY consolidated. So nothing major happened for real. It doesn't seem. I don't like how it respected the structure from yesterday and reversed. Yeah, the yeah, that dip buy type of nature. But here's the thing about, dang, okay, that's a whole nother video. Fuck. There's so much stuff I gotta make. Okay. Yeah, I need to stop cussing. I forget I'm on YouTube. Um, dip buy. All right. How the thing about dip buys is the only thing that justifies a dip buy is um if it fulfills what it's supposed to do. So, for example, um whoa, hold on. And don't I know the screen is black. It's black on purpose. Don't trip. Um all right, cool. You can see that. So, only if it fulfills what it's supposed to do. Like a dip buy is the market market is like trending up, whatever the case is, and then it's going to create some sort of structure, right? Maybe a head and shoulders pattern. Then it's going to dip, right? It's going to maybe make a little order block right here and then just continue to just dip. Cool. And at some point it's going to find type of like some type of like support region or like some type of demand zone, something that it's gonna like it's just gonna stop like right here in this area, right? Then price is gonna come up and it has to confirm an uptrend or in some way, shape, or form to continue. So it makes a little order block. It by technically giving us our our higher low and our higher high to confirm an uptrend. As we break across this, then it it just starts to rip up. Like it starts to rip. It might respect this, and then it just rips up, right? And ultimately, you get this type of nature, right? You have um, you have like price that closed below this area, comes down, and all this stuff, cool. And people will be like, they'll see all of this strong price action, and they'll think it is 100% time for me to like take buys. The thing is that the buys do not confirm until they break the high that put in the dip. So if we analyze the dip, we need to figure out, okay, what's the high that put in the dip? People will think it's this one, but no, the this is just the overall high in the market right now, right? This is the overall higher high, right? Price is making higher highs, higher lows, higher highs and higher lows type shit. And then pr price makes a equal low and then a lower high. What I'm suggesting is that this right here is what has to be taken out because this is the high that quite literally put in the dip. What dip? The put in this dip right here. This whole dip, right? This is what has to get taken out. So if this doesn't get taken out, then then it doesn't matter what happens here. Everything gets rejected. The market goes down and it rips all the way back down, crosses back below the low, and it is just that's what ends up happening. This is a failed dip buy. It is a dip, and there was some buying, But if it doesn't, if it doesn't complete the objective that it needs to, then this is the reaction you get. On the other hand, well, actually, I don't have to delete everything. Let me just put everything back. I could draw a whole nother model. Well, I actually do have to draw another model. So on the other hand, what can end up happening is that price can go up and, you know, cool, and then it makes a bearish structure for some reason. Let me change my color. Then price is just gonna like start to do exactly what we talk about, and that's dip, right? Until, let's just say, it dips all the way down to a some sort of like demand zone that exists over here. There's a order block or something like this, like an order block, or I don't know. There's just demand, right? Something in this area just to signify that price was going to ultimately stop right in here. So now what's happening? Buyers have entered in. They have stopped sellers from selling. Now they're going to get right back into the market, and then they buy it back up, and they do so strongly. Now, this is when a buy is valid, because the high that was responsible for putting in the dip has now been taken out. It's all about trying to figure out where are buyers, where are sellers, where did they start, where did they take off from, and all that stuff. This is the high that was taken out. If we're buying, we're targeting highs. If we're selling, we're targeting lows. If we want to keep buying, what do we need to break? Not lows, we need to break highs. We need higher highs in the market. When we break a high responsible for all this selling pressure, then and only then will this dip buy hold weight. Price will come down to the next, um, let's just say, call this an order block, right? The range of an order block. Price comes all the way down, um, just for the sake of whatever. Boom. Finds support, or it makes an inverse head and shoulders, or it gives you an ICC trade, right? With your indication, correction, and then your continuation to the upside. And then sellers try to kick back in, but well, hold on. So sellers might try to kick back in, but ultimately they're just not able to do it, and we're just in bullish price action, and then we go up, and then we break. Let's just say we break this high, then price does something crazy, and it comes all the way back down. Price comes all the way back down, taps this, because if this was used as a resistance, yeah, this YouTube is going to be saved. If this area was used as a resistance to suppress price, it's going to be used as a future level to support price. Then next thing you know, It's there's just this perfect dynamic synergy retest in the market, and the market continues to buy to the upside, and that's just how it works. Boom, just like so. So what I'm trying to say in so many words is that if we have dip buys in the market and price does not take out the high that created the dip, then this this happens, market failure. If price does take out the high that put in the dip, then what you get oftentimes is deep correction, retracement. This is where you get your 80% corrections, your 78.6, your 70.2s, whatever it is, your deep correction. And then you get your market maker buy model, which, or in other words, ICC. It's all the same stuff, different words. You get your trade entry confirmations, right? Where you know, for people who are just ICC background, you understand, right? This is your um, this right here is your indication. That's your indication. This is your correction phase, and this is just something that we shouldn't trade. Like this whole thing right here, we don't want to trade this phase. And then you enter into your entries right here to take them up to the upside. Like this is your buy, right? And then this right here. Okay, I guess that sucks. Whatever. Anyway, this is your indication right here, right? So so now with all of this said, let's go back to the chart. Switch back over and see what's going on. So, what's the high that put in the dip? It's weird. Like, which one do we want to call? Like, and I would say the origin of the high that put in the dip is right here. So this is what has to get broken. If we were in this trade, that's stop loss. This can get rated, which is why the overall swing high is the protected swing high. But if it gets closed above, then I would begin to argue that, all right, this bearish idea is no longer a solid idea. But this is the high that started the big move down, that continued the trend, led to the dip that we see easily on, say, like this 5-minute chart, right? This dip. But if we don't close above the high that put in the dip, then market continues to fail. That's what we're fighting for. We have to close above that high if we're bullish. If we're bearish, we don't want that to be done. All of this is major sell territory. It just depends on how strong sellers are going to be. Um, you know, we might continue to buy up today and then sell Friday, or maybe we might keep buying up all week. Who knows? And then set up sells for next week. You just never know how things are going to pan out. But as far as today was concerned, though, Um, yeah, I am biased for this overall play, but as far as today was concerned, this was the perfect trade of the day, low hanging fruit. We had super solid entry execution. Price came all the way back down to what the area where buyers took control of the market. Then everything starting, they got back in and reclaimed control. So let's see. So now it is 7:30 a.m. my time. We're 1 hour into the New York Open. According to quarterly theory and these concepts, this is a very special time of day called the true session open. A lot of people believe that the true New York market open isn't the opening bell, it's 1 hour after. What happens within these next 5 minutes makes a huge difference. I can guarantee you right now, there are so many people who are triggering sells against even more people who think it's going to buy. But there are a lot of advanced okay, boom, and then now they're out. So with this happening, now all of those advanced traders are out. Their play for the day is done. This high was not a protected swing high. And yeah, some of them are gonna want to wait for this candle to close because it could print rejection and then sell. But with this interaction happening, like, anyone in their right mind hopefully is not holding on to this type of position to the upside or whatever the case is. You know, and this is also indicative of why I said earlier in the stream, if you're still here and you heard me say it, it was just like, okay, bet. My my ability to predict market movements is pretty good. So as soon as my predictions stop working out, that's when I stop trading because there's something that I don't see. There's something that I miss. There's something that I'm not understanding, right? So even me, like, I know what I know, but it's like I can't. I'm not Doctor Strange, you know. So it's like great, perfect, perfect prediction and execution of this trade right here. You know, this one not so much like but it was like forward testing. Once again, I don't know what I'm doing here. These SMT divergences and different things. So these are not diverged, they're correlated. Oh, but look at that. Ah, see, so I missed it. It was bullish divergence the whole time. You see how this NASDAQ is making lower lows, but US30 is making higher lows. Now everything is back on track. US30 is making higher highs, and NAS is also making higher highs now too. Now the market is back in alignment. So so now what we're gonna see what's gonna end up happening. It might continue to buy unless yeah, it might continue to buy. So NAS had a sell-off. There was a cracking correlation, meaning that if they're supposed to be positively correlated assets, they became negatively correlated briefly. There was a cracking correlation. One made lower lows while the other one made higher lows. But now they've got back on the same page. So price might be bullish. We'll see. Yeah, it's very interesting. So yeah, so I was looking for something. I was looking for something I may have not been should have been looking for. That's the thing. I don't know what SMTs. I don't know how to trade them. There's SMTs within SMTs. This was a smart money trader. Like this was a divergence that I would have been able to identify if I had two charts open at once. If I had NQ on one chart and YM on the other. And what time frame am I on? Am I tripping? Oh. Yeah, so this low, wait, hold on, am I tripping? Why is this showing me the same? Hold on. Um, setting. It's not supposed to change the symbol. I need to figure out how to set this up. But anyway, none of that is important. So let's go ahead and clean up the chart because the trading is done for the day anyway. We're gonna leave only these two lines on down here. We're gonna turn this off. We don't need that. We we should keep. Oh, you know what? I'll mark that out like this. We'll leave that there. We'll leave that there. We don't need that. I don't think. Do we? What is that? Okay, nah, yeah, that's old. I don't need that. And I don't need that either. This was a pretty important high. I don't like the fact it got broken, but we'll see how price plays out. And then I'll go ahead and leave this liquidity line. This was my trade for the day. And to be honest, I didn't even, I would have been out way sooner than it even went. I would, I wouldn't have held it all the way down there because I think I was out. Like I was wanting to get out of this trade, like at the low. Like I was like out like somewhere right here because I was already about $1,000, I think. Or no, I wanted to get out right here. What is this price? Yeah. Oh yeah, that's where I was already at. Yeah, that was $1,000. So that would have been my move. It ran for almost double, so it was about a $2,000 trade all the way down to these areas. Not bad at all. No drawdown. Like I would have been prepared for a 1 to 4, but never experienced it. So that was the play. me close that. Or whatever, it don't matter. Hmm. So, w- am I gonna be doing more lives? Oh yeah, dude. Every day. Every day. I'm getting my feet wet. I still think it's gonna sell, but that, I mean, well, no, okay. I know it's supposed to sell because of the model. Um, because of that model that I just went over, right? Price is supposed to like it took out the high. Now we're supposed to get the deep correction, the deep retracement, then the continuation, right? So if that happens, then where would our deep correction be? We broke the high that put everything in. Theoretically, we should get the deep correction all into this region here, and then ultimately buy it all the way back up. That's like the energy. That's like usually how this type of market cycle goes. Um, but yeah, I'm gonna be doing these lives every day, um, and whatnot, and yeah, about right there. And there's gonna be some trading, some education, a mix of both. I'm gonna talk about whatever I want to talk about: psychology, philosophy, spirituality, trading, all that. Eventually, yeah, I need to make a video. I'm gonna be unveiling a lot of things, so there's gonna be a member only section for subscribers also for people who want to have the course that I'm gonna upload, and I'm gonna explain like how everything is gonna work. There's gonna be a ton of free content that's gonna get any trader super duper duper far in their trading journey. But if you want my take on the best way to bundle the basic concepts together to create strategies, then I'm going to have like about 4 or 5 different courses, um, which are just strategy overviews, in-depth overviews, uh, showing you, leading you all the way from the basic concept that you have to understand to that you need to apply to know the strategy. And there's going to be like about 4 or 5 different ones. Um, then yeah, I'm going to be live streaming the sessions in the morning and just going live randomly sometimes throughout the week, throughout the day. Different days are going to have different themes. I'll usually do psychology more so on like the weekend, maybe, or towards maybe the start of the trading day, like before Asian sessions, or just whenever I feel like it's needed. Um, yeah, market overviews, videos. I'm just gonna be real, like YouTube is gonna be my platform. YouTube is gonna be my, this is where I'm gonna live on YouTube. So, um, yeah, members eventually are gonna have access to um, private live streams, or at least I'm gonna call it like early access to live streams. So when I am trying to actually execute and enter trades, then you'll be able to see them because, like, if I'm making you money, okay, I want to be compensated a little bit. But then, streams they're also gonna be public to watch. People who subscribe will also be able to see the past recordings. For now, I'm not implementing any of this stuff. I'm trying to get used to it. I'm trying to get my feet wet right now. This is the first live stream. So I want to live stream for at least maybe about a week or two before I start doing this. uh, and whatnot. And then I am gonna make a new Discord group. I don't know if I'm gonna make a new one or if I'm gonna totally restructure the current one, but something's gonna happen. So yeah, no problemo. Go back to Discord. What are they saying on Discord? Same trade. Sure. All right. And can I explain Wicksauce? Um, Wicksauce is my flagship strategy. I can explain it on a very basic level because eventually, I mean, like that's what I'm well, let me be. It's only gonna be one of 5 strategies that I teach, but it is like my personal like flagship strategy. But so just on a free ski, let me just kind of like articulate what that means. Um, Wick sauce. All right. Mm, okay. What you do is you find a wick, you mark it out with a box, and if price fails to close below the wick, if it's a support wick, right? Wick, it says bullish above, bearish below. Price can raid below it with a wick. That's fine. If it doesn't close below it and then it comes back outside the range of the wick, this your buy entry. So this is a 90-minute chart. Drop it down to like 5 minutes. We can see how price played around in this range. There are still other concepts that you do need to know to apply to this, right? This is just edge, meaning that all I've done is I've said, okay, this is my area where I am going to try to look for a trade, but I still need to apply a lot of other basic trading concepts and how-to information in order to analyze my entry in my trade. But this is the basic. If I try to keep it real basic, when price comes down into this range of the wick and it fulfills 50% and it comes back out and proves that it can close above, I like outside the range of that wick, that is a really high indication that a good indicator that price is going to continue to buy up above that range. Um, is not sometimes it can be a really long-term trade. Sometimes it's just good for a nice quick move. But on any of these moves on gold, I mean, That's a lot of money. You know, this is a lot of money. These retests, if you can manage to get a tap of a 50, then you take the higher low or take the ICC price makes higher low, higher high, breakout, whatever, or just this support tap right here on the range of that wick. Any of these type of trades, that's good money to be made. So depends. Um, really sucks when the market is choppy. Actually, I'm lying. It could be very helpful if the market is choppy, to be honest, because what you're doing is you're analyzing the extremes. So for example, right? Um, for example, market is really choppy right here in this whole area. And the market is just ranging. I don't like this color. All right. So the market is just ranging, right? Sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. It's just ranging like crazy. So I would call this a no trade zone. You can call it consolidation. You can call it a range. Same words, bro. I mean, it's different words, same definitions. It don't matter. It's ranging, going sideways. Okay. At some point, we like to break out of this. Until we do, Sai, for example, he's going to be like, all right, I'm not going to trade none of this because he can't. However, if you're someone who knows how to come in and identify how to analyze the extremes, now all of a sudden you can, right? So all you do is just analyze the lows of the ranges and the ranges of the highs of ranges, right? And I'm on a very low time frame, probably too low. Go to a 15-minute. There we go. That's a lot better. So for example, say if we marked out this wick right here. Look at um, how price interacted. Price, first of all, the wick was created. Price bought. This is how I trade ICC. ICC is not size model. ICC, in my opinion, is just it's just the vocabulary words. Size trading strategies it came from somebody else. Like he came up with the words indication, correction, continuation. So, but the way that I interpret that, right? Because that's no different than saying breakout, retracement, confirmation test, or whatever, break and retest. It's the same thing. It's synonymous. But the way that I interpret ICC with this strat is that the formation of my wick is my indication. This is letting me know that price traded away from what the creation of this range. Then this is my correction back into the range. I wait until so that's one. A couple another concept with this called like premium and discount. That's the whole point of a fib in a way, right? When you draw a fib, I only have two levels on my fib that matter. The red one is 50%, the blue one is 61.8. I don't need anything else. The red one, in my opinion, is more important than the 618 because all this is letting me know is that this is where I need to, this is my area where I need to buy, and then this is my area where I need to sell. I buy below 50%, I sell above 50%. That means if I'm buying something below 50%, that means this is my discount area. If I'm selling something, what's the opposite of discount? This is my premium area. Logically or no, conceptually speaking, when you go into a grocery store or or whatever, or department store, clothing store, you see something 50% off. Are you inclined to buy it or are you inclined to not buy it, which would be sell it or something? The proper answer is you are inclined to buy that item. It's 50% off. It's 80% off. It's on clearance. It's 90% off. Whatever it is, you're inclined to purchase it. So with that understanding, why is it that when traders see the market moving and they see something like this, why are you trying to take sells at lows? Why are you trying to sell or to get into shorts in an area where you should theoretically be considering buys? Because the market is on discount. Why are you trying to take buys when the market is in a premium and it's technically not, the price is too high to take buys? It's because the retail trader only knows or well usually thinks that okay, well we need to take buys above here so we can go higher or sells below here so we can go lower. But what happens when that's not happening right now? This is what's happening. Where we're doing this. Okay? So when we have a range identified, this range could be a consolidation range. It can be the range of a wick. It can be the range of a candle. It can be a range of a series of candles. It can be the range of a chart pattern. It can be a range of the entire trend. It can be the range of a fair value gap. You have so much liberty on what range you choose to mark out. You just have to have a reason for it. So now when we go back up, price comes back into this range. This is my 50%. At this point in time, I cannot buy, but I can buy down here because price has come down and fulfilled my 50% requirement. So this is telling me, just like how I said that this is my buy area. Yes, this whole area is good for buys, but now this is the extreme of my buy zone below that 50%. So imagine where I can analyze and get executed into positions at because of this extra layer of understanding that I can add to my trading. So that's great. So now with that understanding, I now no longer have fear associated with entering into trades such as this without any confirmation. I'd have no higher highs, no higher lows being made, but because I understand conceptually what I'm looking at, now I no longer have fear. And this is my trade, and I can go ahead and execute, get me a great one to three, boom. And I've made heck of money like this over and over and over, right? On a very basic level, the understanding is that, um, and even still, I say that this is basic, but if you don't use that, the original way I say it, wait for the correction phase to be over, go down into the range of the wick, wait for bullish price action. What does that mean? Higher highs and higher lows. So price came down into the wick. Boom. Then all I needed to do was wait for bullish price action. On its way down, price made this. And then now we have a higher high in the market, higher lows, equal highs. So now we know they're going to get taken. Prices still accumulating, making higher lows. And then eventually we make a bullish order block. We're just accumulating and buying outside of the high of this range. We just wait for bullish price action, wait for price to close above this range on a 5-minute chart, and then this is your execution right here. Then you can put your stop loss. Since you didn't, I don't know. I mean, it's up to you. Like you can put it on the other side of the wick. You can base it off of the market structure that was created inside the wick. And then this is the execution. Point is like, yeah, now it's a 1 to 2, but you're still capturing a trade at the right time. You're not going into drawdown. So most trade entries or executions that I teach have to do with entering trades at the right time. So you don't have to experience drawdown and what conditions you need to wait for in order to do so. So in a very basic sense, this is Wicksauce. This is Wicksauce like 1.0. This is not my strategy. It's just price action. I'm saying it's not my strategy because I'm not saying like, okay, I didn't create this. This is clearly something that already exists. I didn't know about it until I discovered it. But I mean, this is also like an ICT thing. I didn't know about it. But I do have Wicksauce 2.0 already, so I didn't explain that aspect of it. But Wicksauce 2.0 um, just has a couple extra layers to this, so you're actually getting into the trade like down here, and that's not free information. So, but that's Wicksauce. So on a very basic level. So now that's one demonstration. Let's go ahead and look at another. I'm not gonna just leave you hanging with just only one example. I think that's a little cruel, but um, there is a couple. I'm waiting for it to hit, like the one that I wanted to show. There it is. And you can stop now. So yeah. So yes, it's the idea of Wicksauce is just that okay, I want to analyze the extremes of price areas. You know, if if getting into trade at consolidation is a bad thing, it doesn't mean I can't get into trades at the bottom for buys and at the highs for sells if I know or recognize that we're in a range. So there's that's just one example of Wicksauce. Here's another one. Right, price came down here, hit that 50%, bought. Perfect. Right? This was the first raid. It never fulfilled 50%. This is liquidity. So you see how I didn't draw a liquidity line in the first example, but I did here? It's because that concept applies here. That's why I teach so many different concepts because I want you to be like the most well-equipped dynamic trader that you can be. Because the market dynamics are going to present themselves differently. So anyway, ultimately though, price comes down, fulfills 50%. This is my indication going out, like the creation of the wick and trading above it. This is my correction back into the range. This is my continuation back outside the range. Where do I buy? Right here. Target what? Highs. If we're in buys, we target highs, right? So that's example number 2. That one's very clear, so I didn't drop. I'm not gonna drop down to show anything more on that. Now, uh, what I wanted to show is this particular example. So let's kind of think about what we're looking at, right? This is a huge sort of consolidation-y type of area. Market just overall ranges in this whole area, right? That's what I'm trying to look at. The point of what I'm trying to say is this is the breakout. This leg is what triggered the downtrend to start. This downtrend, after this downtrend, this was the first lower high. So now this was the confirmation, or this was the high that led to the confirmation of the downtrend continuing. This is what sparked it. So this is your indication, this is your correction and whatnot, but this high is what led to the continuing of the downtrend. So I'm saying that so we can articulate why I'm putting weight on this particular high that's in the market. Now, what I do if I see a big wick like this, I'll mark it out. I usually put another line on my wick, and I have a wick template for my line that makes it dotted. Says wick, we're bullish if we close above it, bearish if we don't. Well, guess what happened? Market gapped up this day, failed to close above it. I had some really decent price action that got triggered, right? And we ultimately sold. That's Wicksauce. If you can imagine what we're looking at, price opened and it started making lower highs in the market. Price went up for another retest just to make another lower high and just tap that 50% perfectly. Closed off with rejection, continued to sell off, broke the lows. There's so many ample opportunities to understand that there's a short that needs to be taken here, here, or here, as prices closing below these lows or breaking them to the downside based off Wicksauce. The idea though is that you get into the trade either inside the range of the wick or at the low of the wick for the best risk to reward and the safest of trades. And then that's it, right? Price went up and ultimately manipulated above this wick, but guess what? Like, there's ranges on ranges on ranges. That's the issue. It didn't close above the high of the leg that broke out of the range. Wicksauce. Look at how great your entries could be with the understanding of indication, correction, and continuation, but applied differently. Because at the end of the day, all ICC is break and retest trading. Indication is your breakout. Indication is your breakout. Whatchamacallit. Correction is your retracement or your pullback. And then continuation is your confirmation. So if you were to Google like confirmed break and retest trade or break and retest confirmation or trend line confirmation, all of that stuff, that's what that is. Like, for example, say if we have a trend line or something and you get a break and a retest on it, you get your confirmed breakout trade, that's your continuation trade. So, yeah. Someone told me to go to oil. I'm on oil. Oh, interesting. Oh, yeah. I mean, so yeah. So what? Are you gonna take the buy? Yeah, that looks nice. Let me go on a weekly. Yeah, I was thinking it should buy with all of the war stuff that's going on. They're closing straits and ports and water passageways that oil goes through, but I was quite surprised to see that the initial kickoff to the war triggered sells on oil. So that was that was like interesting to me. Well, okay, well not these buys, but I'm saying like there was something that happened over the weekend and I was like, "Oh, that's gonna make oil drive up," and it's just sold. So maybe the market it just needs to do what it needs to do. But yeah, this is a major demand zone. From a weekly perspective, I did see like we have room to flirt with the idea of correcting down somewhere into these ranges. I guess we did kind of tap it already. Um, there's a lot of different ranges in here. You have this one, then you have this one, and then you have this one. Like maybe like this. You have three different ranges in this area. Did we test any of them? We tested the first one. So that's something to consider. We did break above this, and this is a very key level in the market that if we were going to sell, we would have wanted to respect that. However, it might be a fake break. I don't know. The reason why I'm saying it might be a fake break is because it was just a volume imbalance. We gapped above it. We didn't truly trade above it. Like there wasn't there's no bullish candle that actually drove through this high. We gapped above it, so we can't really put that much weight on it. Um, as a true breakout to the upside. We got our correction back down to the daily level. We are in a demand zone where buyers did accumulate. I think the best thing that we can do is understand that buyers will try to push the market up, but and I guess that is it. Is this an so I think everything is contingent upon if we're viewing this break the break of this high as valid or not, because it technically didn't break the high. It traded above it. There's a difference. That this candle rejected off of it, then over the weekend it gapped. We it did continue to trade up higher, but like it's just from I don't know. I don't know. So it depends on how we want to view this. Is this a true market break or is this not a true market break? If it is, then it's an indication to the upside. This is a demand zone. You can anticipate buys. If this is if this is just news, manipulation, and illegal price action, then we're still bearish because this is something to consider. Like, first of all, this is a major support and price came down, went up, and we have indications to the downside. I would argue that this is fake and that price is ultimately what it's trying to do is potentially give you continuations to the downside. I would say it's too early to tell. I think we need to let this daily candle close because there is a case to be made to take sells if this daily candle closes like this. Um, so I would just say it's up to you. Um, it truly depends on how this daily candle closes. If it closes like this, I'm not taking no buys. If it, especially if it closes below. But nah. Can it buy? Yeah, I would expect it to, but I would only expect it to buy to make a lower high to sell, according to this. Now, if the fundamentals of the world is dictating that price should buy based upon these volume imbalances here, then then that's a different story. I'll go ahead and like I'll wait for the market to prove that to me. Because if it doesn't, like I said, I'm gravitating more towards like price coming down into some of these deeper ranges. And even if I just analyze, just do a quick like, okay, what is the overall 50% from this low to this high? And that sort of overlaps with one of the ranges. And I know that, right, I'm gonna want to wait. Oh, it might be the exact price. Hold on, let's put it there. That's so close to like, that's too much synergy for me to ignore. So yeah, this is where I'm like this right here. This is my buy zone. Like this would be my preferred area to execute because of synergy now. Or not synergy, but confluence. You know what I mean? Um, Now, depending on what happens, market could fail and fall deeper into buy territory and give me another entry down here, and that would be great, but it's not required. Um, this one could give me a bullish reaction, but it's not 50%. The whole concept of premium and discount. We're not in buy territory until we are at 50% or lower. Until things are half off, they're not on sale. So that's why we put more weight here than we do here. Even though this looks like a better gap, it's not the gap. You know what I'm saying? So, best thing to do is to sit on your hands with this one. If you were trying to look for a swing trade, if we scale this down to a 4 hour, then down to a 1 hour, mm, there is a nice order block that also exists up here. Why did I mark this out? I don't know. I don't know why I have this box here. So I'm just gonna delete it or update it. We do have a nice oh, it was the volume imbalance. It was the opening prices were different. Okay, so it's identifying this right here. the fact that we closed here and opened up here, and this is what the breakout was. Got it. So anyway, what I was just trying to highlight is that there is a nice order block right here. Okay, it's a nice area of interest to target potentially. I don't see, I need structure. I need to figure out if there's anything in here that we need to target, like where are we going? 30-minute chart. Now we're starting to see something. So I see another order block here. Just top-down analysis, bro. So this is gonna get liquidated eventually, maybe. Drop it down to a 15. Now see how we start to get piece by piece a little bit more information. We see the 30-minute order block clearly, but there's no order block up here until we drop down to the 15. So now we see this one as well, right? I'm gonna go ahead and change the color on these to I need to make a new template. I just want them to be red. Midline. That's not putting a midline on it. So yeah, so that's an area of interest. Um, Save template as red box. I'm gonna just put an asterisk at the top. All right. So these are just zones and areas of interest like supply and demand, that type shit. Like just these are supply zones for me, areas of interest that I want to potentially take sales at, or areas of interest to target if I'm in a buy. Um, the 15-minute chart is probably all I need to drop down to, because now I drop down to the 5-minute and I see just a little bit too much noise. I don't need this. 15-minute to me looks really clean enough. So now we have to understand something about market cycles. Yes, we tapped into a demand zone, but is it time to take buys? Hell nah. Why? Where is our bullish price action? We don't have any yet. Price is sold. Now price is bought. We don't have a confirmed support yet. So what do I mean by that? We don't have a price. If price is coming down, we don't have a we just do it like down here. So if price is coming down, we don't have a double bottom yet, like anything like that, right? We don't have a confirmed support. And then we also don't have any higher highs and higher lows to take any trades off of. So what I'm saying is price has just come down, right? Price has just come down, making lower lows, lower lows, lower highs. What's up? And then now prices come up, but that's just about it. And this is not good enough for us to just be like, oh, we're gonna get a higher low and a higher high. No, like price has to come down all the way. I gotta get some sort of double bottom, some sort of support, some sort of W, something, some sort of equal low type thing, manipulation, something where there's a candle closing or wicking somewhere relatively equal to this low. Then I'm gonna come up and potentially get my higher high, then my higher low to push up. So until I get something that looks like this, then there's not, market timing it just isn't on my side right now, right? Not yet. To take a trade to the upside. Also, demand requires that price accumulates. So what I'm trying to articulate here is that we haven't even begun or finished the accumulation stage, right? Accumulation typically looks something like this. Let's say we have a downtrend, right? And let's just say it comes all the way down to here. Okay, bet. This is what accumulation looks like. It's going to come down, then it's going to make a W, then it might even manipulate. Hold on, I'll adjust everything. Then it's going to come up, confirm a higher low or order block inside the range, then distribute to the top side, hit the neckline, then break out, confirm, buy up some, then it needs to reset the whole thing, come all the way back down, create another higher low in an overall sense, then push up. So what I'm saying is like this is what a standard accumulation phase looks like, and we don't even have that yet. So there's a lot of understanding market cycles. We don't have this yet. Price will trend down into a area of interest, a demand zone, a range of a wick, big ass order block, whatever it is, who cares? If price is supposed to reverse and is supposed to accumulate on a small scale, big scale, whatever it is, we're gonna see price come down and it's gonna have to make a double bottom. Then that double bottom ultimately gets manipulated. Then it comes back into the range. It comes back into the range. It gets manipulated, comes back into the range. It can tap the low or just make a higher low, but it comes back into the range and decides to break out of it. Then confirms it, continues to accumulate, breaks out of the overall range that we had identified, buys up, and okay, great. But then this isn't good enough because what's happening? The only thing that's happening is price has come down and price has gone up. That's it. We still need price to confirm. We still need a price to confirm some type of support or higher low to continue pushing up in an overall sense. That's what this leg is supposed to represent, the overall higher low, to then give you your trade execution that triggers here. You see what I'm saying? So understanding market cycles overall and like overall cycles, which is would be the yellow, and in this case, and then the micro cycles, I guess you could say, which would be the blue, and how they need to line up is very important. Because then, while this is looking like an overall cycle, all this is just part of another big cycle somewhere where price is just coming down, tapping support, and buying up, right? That's all. And I teach this. This is another thing I teach. I teach these concepts of tracking your highs and lows masterfully and waiting for them to all sync because at some point they will. And that's when you take your best ICC trades. A lot of people are taking ICC trades only based off the blue and they're wondering why they're losing because they're not being sensitive to the overall bigger picture. Then some people are taking the overall big picture and losing money and realizing it's because you're not being sensitive to understanding that the blue didn't align for the trade yet, and that's what we got right now. You know the overall big picture, but the micro cycle of whatever's going on has not played out yet. Look, see, I didn't even have this. I didn't know I didn't even know I was in bar replay mode, bro. I was wondering how come I'm not getting any candles? Cause I just drew this whole thing out, right? Saying that price needs to come down and do some accumulation, right? And before it's ready. So I'm like looking at it, I'm like, bro, what's going on? I didn't even know I was in playback mode. And then now look at, okay, so hold on. So now that we've done the accumulating, right? We came back down. See? Then we came down and so this was our relative low that I said we needed. Then we came down and manipulated. Relative low, manipulation, manipulation, high break, we come back into the range. We come back into the range and we just accumulate. This can look like whatever it wants to look like. Ultimately, we break outside of whatever we have marked. The first time we tried was here, I suppose. So that's like this. Then we came back inside. Now we're up above it. This doesn't mean that in the grand scheme of things, it's not a bad entry. It's not a bad fill because in the grand scheme of things, what you want to do is you want to like use proper risk management, get in once you know the market is overall on your side. Put your stop loss. And key word to all of this is proper risk management, bro. And then boom, right? But if you want to be super duper duper aggressive and like over leverage and all that kind of stuff, then you have to be patient and wait for all of this accumulation to finish. So if I'm looking at it now, what has to happen is price to we need price to hold above this box. We need price to do something that's going to tell us like, yes, there is a reason to buy here and we need it to make some progress. However, this progress is not going to take us all the way up. This progress is going to take us up just so that we can come back down to fulfill an overall play. Then we push up. So that's what's missing. We'll probably be getting that over I mean, the morning is still young, bro. Like, I mean, well, it's about to be what? It's close to noon on the East Coast. So, we still have like two 2 hours. Wait, no. What am I doing talking about? Because yeah, market closes at 2 p.m. my time. So we still have hella time. We got 5 hours um left to trade this session. So that's a lot of candles that need to be printed, and then you got Asian sessions and London sessions, whatever sessions these things are gonna pan out and play themselves out in. So yeah, it seems like we get a lot of big moves in the afternoon. Yeah, that's like in the evening. This is at 10 o'clock my time, which is in the afternoon on the East Coast. So who knows? Maybe there might be something nice loading up soon in the next couple hours. So anyway, all of this is just like little micro level understanding that you would need to know as you're trying to execute your positions, you know, and try to time and figure out like, hey, is it the right time to buy? Because oftentimes, bro, it don't it don't take that long for you to know where to buy, but it takes you that much longer to know when. And if you only know where to buy, you're still just an average trader. If you don't know when to buy it and when to sell it, you can't call yourself pro. You can't even call yourself semi maybe semi pro, but like you, you you can't you're not up there, bro. There's two things on the chart. There's price and there's time. If you only know how to analyze price, okay, that's half the equation. Um, and 50% gets you a F in school. So, but people say, okay, well, it's also average because technically it is. F is average. 50% is average. So that's what I'm saying. You are an average trader. You're right half the time. If that's what you want to do, then that's fine. You can make money being right half the time. Some of us love this a little too much to only be right half the time. Yeah, see, so that was bullish, right? Because we took out the high that put in, we took out the high that put in the gap, or that started the dip, and then this one too. So fair enough. And there was a SMT down here. This was making lower lows while US30 was making higher lows. And then they all got correlated on the same page and then started buying up. It makes total sense now. But still, this was a great trade. So yeah, I don't know if you were here, but this was the trade setup we had from this morning. Right here. Hmm. This was far from a protected high, but that was cool though. Okay. So now it is getting close. Oh, so as far as how long these streams are gonna be, I'm streaming every day from somewhere around market open, a little bit before market open, maybe an hour or two even before market open. It depends. I love to trade pre-market open. That's me. But I'm gonna be streaming anywhere from like market open, 1 or 2 hours before, all the way to 9 o'clock my time, which we're getting very close to it. Simply because the nature of how I trade, I don't like this was our trade. We got in and then we were done in 10 20 minutes from the time the trade triggered. And live stream I could have should have like turned it off, right? We were done. So um but I'm gonna be after I'm done trading or whatever, I'm gonna be just tape reading, talking, analyzing, teaching, whatever, just like right live streaming. And then 9 o'clock is a hard cutoff. I'm done. And then I'm gonna go not live my life. I still have work to do. But 9 to 12, I'm gonna take out. That's my time to eat, go to the gym, go on walks, pray, watch a sermon, read the Bible, whatever I'm gonna do. Then once it's 12 o'clock, that's when I'm back available for the community. I'm gonna answer questions, um, whatever it is. I'm back at my desk is what I'm saying. And I'm gonna be making videos, recording videos that I'm gonna be uploading to YouTube, blah blah blah, and doing a lot of like other logistic work. So that's just that's just how my days are gonna flow. But live streams every day for anywhere from 3 hours to like 3 to 4 hours. Today I started a little bit late because I was trying to figure out how to set YouTube up. It's a little complicated, but not. I think I got it. So, word. And then so then also additionally to the daily live streams, I'm going to also just live stream in a general sense. Uh, any and all live streams I do like that I normally would do on Discord, just being live for no reason or teaching or whatever, that's just going to be on YouTube also. So you might catch me live randomly, or I might schedule it, make an announcement, say, hey, I'm going live tomorrow at, I don't know, 12 p.m. Uh, to go over such and such, or I have a lot of people asking me about such and such, or whatever. I'm gonna go over that, or I'm gonna do a psychology, or we might do like a little podcast, whatever, live stream, whatever it's gonna be. Um, and yeah, so yeah, if you want the notification thing, I guess I gotta start telling people that, like, turn notifications on for either videos or live streams if you can. So then that way, like, you know. But I'll be live streaming every day if you want to check me out. Oh, gold. What did gold end up doing? See, it's just messing around. Gold tends to move a lot before opening bell, then it slows down. Then it's gonna pick right back up after lunch on the East Coast and Wall Street, or or during lunchtime. There's something called a lunchtime reversal. But at 9 a.m. My time, or 12 p.m. New York time, is actually that's when London session closes. A lot of people don't know that. They think London session is overnight. Yeah, it is overnight, but the session closes, like, it overlaps well into New York. It closes like in 17 minutes from now. So that's going to bring that's going to bring in some let's just say price action, some algorithmic volume, some price action, things like that. Um, the only session that'll be open will be the New York session, and that is the first time of the day where that dynamic happens. So then you get the only sort of real market participation you get on an institutional level is New York institutional, whatever, price action. Um, so then that's going to offer, so a lot of people call that the PM session, right? You have New York session, you have the first half of New York where you have the overlap. Then Wall Street, they go out on lunch, right? It's lunchtime. Then they come back from lunch and trade the afternoon session until it's 5 p.m. and they get off work, right? So 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 what is that? That's from give or take about 11 p.m. No, 11 a.m. my time, sorry. Um 1 p.m. East Coast time to 5 p.m. East Coast time. So leading into that 11 o'clock hour my time, or whatever the case is, like, you kind of, if you want to trade the PM session, then that's when you would go and get prepared, and you would look for whatever move is going to trigger during those times. And it seems to be that usually somewhere around what 11:30 my time, which would be 11, 12, 1, 2, 2:30, around 2:30 in the afternoon, East Coast time, usually seems to be a pretty decent time for the market to move. So yeah, being prepared to execute somewhere around then, if there's a reversal or a play, is a good idea too. But like, I don't want to. That doesn't fit in with my workflow in my life, and I'm not gonna be up live streaming the whole damn session. That's just not. I'm not doing that. You know. So yeah. But to say all I said all that to say, gold is looking like it's going to over the course of this next hour. It's going to set up the PM session. There's gonna be a play. If it was supposed to sell, it should have sold. So I'm thinking that it's gonna do something. It's gonna liquidate something. It's coming down maybe into this range, or maybe to wipe out and liquidate this low, come into this range, set something up so that most likely it'll ultimately buy later on, and then probably consider selling off at that point. It just depends on how big this play is going to be, because I'm thinking like, yeah, this seems plausible, but if we confirm this uptrend or this reversal down here and it continues and this breaks, then we got potential continuation to go up and grab the liquidity that's resting in here. Or rather, I think we still have to engineer some liquidity, to be honest. So it might come up and then then it might sell, then it might come back up again and then do two double raid and then sell off. Something like that. That would be nice to see. So, but yeah, there's just not the time yet. It's getting close. But both buyers and sellers are weak at the moment. That's very visible and apparent right here. Like everyone's happy. Like someone gave me this perspective of what consolidation really is, and it is basically like, or just what a range is in a general sense. And if you just think about it, it's like, okay, buyers and sellers are both pleased with the price. That's it. Buyers and sellers are pleased. If if sellers weren't pleased with the prices, then it would sell off. If buyers weren't pleased with, no, wait, if sellers weren't pleased with the prices, then price would buy to higher prices for them to sell at. If buyers were not pleased with current prices, then it would sell off to lower prices for them to buy at. When you see them just kind of ranging, it means that they both believe that the range that they're trading in is fair, you know? So, and then you get the concept of that's what a fair value area is. A lot of people know what a FVG is, right? That's that's a fair value gap. A lot of people tend to neglect the understanding that he also teaches what a fair value area is, right? Which is which is synonymous with a with a ranging market, which is synonymous with consolidation, which is synonymous with An order block, because that's what that is. It's an order block is a block of orders where there was both buyers and sellers. It's synonymous with high time frame wicks. It's synonymous with what else is it synonymous? What side calls a no trade zone? It's all the same thing. And I could prove it if I took out time to prove it, but it's the same thing. Fair value area must be the opposite of a gap. Fair value area is ranging markets, sideways market trends, consolidations. Yes, order blocks, because what is an order block? It is a area of fair value where buyers and sellers created an exchange. Then afterwards, it decided to move in whatever given direction was to create what? The fair value gap, which exists here, where we just sold off from. This is the fair value gap where the blue circle is. This is the fair value gap. The red box is the fair value area. So I'm proving it. Order block is a fair value area. High time frame wicks. Go to a 4-hour chart. If I mark out this wick, this in this wick, there is trading happening, right? This wick is an order block. There's order blocks inside this wick. This is a fair value area. It's not a gap. Just by the simple definition of what a wick is, proves my point. Let's talk about it. A ranging market is an area where what? Price goes up and down. A no trade zone is what? A range in price where the market is going both, where it's buying and selling. What is a wick? It is a range where in order to create the wick, we needed buyers to buy it up and sellers to sell it down. It falls into the same category. Ranging market, consolidations, market structure, no trade zones, high time frame wicks. These are all fair value areas. Now, if you wanted to know where you should sell it at, all you got to do, damn, I'm giving away too much sauce. I need to stop. All you need to do is go. Nah, I'm giving away too much sauce. Never mind. I was about to teach Wicksauce 2.0. I can't do that right now. That's not free. But yeah, bro. Wix is uh I'm gonna cut that out the recording. But yeah, fair value areas, bro. I'm gonna teach you everything that you need to know on a conceptual level. So you embody the basic understanding of price action and you can apply it to be the most dynamic trader that you can be. Um, because at the end of the day, mastery is nothing more than the embodiment of the basics. If you think about Kung Fu or any martial arts, they practice those repetitive moves over and over and over and over and over and over. It's just they're not committing it to memory. They're not trying to memorize these moves. The fuck you look like on a battlefield trying to memorize some like, okay, this comes out. No, you just embody and internalize the basics. Once you do that, you can trade anything in any market in any kind of way. You're not stuck and limited to a strategy, you know? It's like words. You have to know the ABCs. Once you know the alphabet, you're not sitting there like, okay, let me try to remember what my ABCs are. Okay, it's A, then after A is okay, I know the first three. It's A, B, C, Then after C, it's D. Wait, no, it's F. Wait, no, hold on. No, it's D. Wait, A, B, C, D, E. You see how dumb that is, right? We know our ABCs. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. You know that elemental is not a word, right? L, M, N, O, P, Q, R, S. Wait, hold on. Q, R, S, T, U, V, W, X, Y, Z. You know it. It's not because you memorized it, it's because you embodied it, you internalized it. There's a difference. So now, because you know this, you can construct words. You can rearrange this basic stuff into words. Banana, patio, indication, correction, officer, whatever, right? Then after you have these words, you can be like, okay, now you can construct sentences. Um, right? You can construct sentences. Then after that, you can construct paragraphs. You say, okay, I bought 5 pounds of potatoes from the grocery store. Grocery store. Um, um, uh, but it'd be like, but ran into trouble on the way home. Um, uh, on the sidewalk, on the sidewalk, there was a $10 bill, and I figured I'd pick it up because it was just laying there, right? You can start telling a story, right? Um, so you be like, so as I went down to pick it up, I realized it was a setup by by the sound of a gun clicking behind my head. Dude said, I like them potatoes. You know, I don't know. I like them potatoes. Let me get them up off you before I blow your brains out. Right? So, point is what I'm saying, okay, bet. Now I can construct paragraphs. But now here's the crazy thing. This is a type of paragraph. Meaning what? This is nothing more than just a story. What if I want to construct paragraphs that are um, anything else, news or informational writing, right? There's different approaches. Research papers, um, argumentative essays. You have memo, memorandums. You have business letters, right? You have so many different extra styles of paragraphs that you can write, meaning that all of this means that you can create different strategies by bundling basic concepts together as you please. And this makes you be and this is what leads to you being a dynamic trader, right? This so now you're not just only stuck and you only know how to write memorandums or business letters or only one type of no, it's because you took out the time to go back to the basics, learn your ABCs, learn how to construct words, then sentences, then paragraphs, then different types of paragraphs. Now you're a dynamic trader and you can trade anything in any market condition. And that's who you should strive to be as a trader, in my opinion, instead of being stuck to only being able to trade one type of strategy. So it all starts with the most basic fundamental building blocks of strategies. So for example, how do we get there? If this is what I'm trying to articulate, this is what you need to do as a trader, then what I'm trying to say is you need to understand what is the most basic, but what is the most, not basic, but what's the most raw information on a chart? The most raw information on a chart is, and you probably wouldn't even think about it, but it is open, high, low, close. Before anything else, there's an opening price, closing price, a high price, and a low price of that's just it. Then then that means okay, under that umbrella, you need to dive into opens. You need to dive into understanding the ins and outs of closes. You need to understand, and we can lump these together, highs and lows. Or you could, opens and closes are kind of their own thing too, but you could be like, you need to understand opens and closes, and highs and lows. Then the thing is once you dive into that some more, you understand, okay, there's opens and closes and highs and lows of all of these things. Candles, um, trading sessions, days, or I'm just gonna wrap this up and say like time periods, right? Such as like what hours, hourly prices, 4 hours, days, weeks, right? Trading sessions, the highs, lows, opening price, closing price of New York session, Asian session, so on and so forth, right? Um, and and then as far as highs and lows goes, you don't just have only highs and lows of candles. Now you have highs and lows of like a series of candles. So now you start to look at like highs and lows of swings, ranges, right? Ranges is what you get into once you add these together. Combinations of highs, lows, open and closes, right? Um, you got highs and lows like a market structure, right? And there's different types of market structure, right? So on and so forth. And this can get very deep. And all we did is just like we're just talking about we're just talking about this, and it's the most basic thing. Then because you start to understand some of these things, now you're able to you can start knowing how to track your highs and lows. Oh, yeah, the order of the highs and lows. Like, yeah, um, tracking the order in which highs and lows are made, right? What else is there? There's a lot, bro. Um, what highs and lows are considered liquidity? Why, you know? And then it's like it's crazy. Already we just jumped the gun because we didn't even talk about what liquidity is. So there's building blocks to this, and I want people to understand this stuff on a conceptual level before we just start to like start talking about strategies. I'm not going to tell you what to do. I'm going to tell you why it's being done. That's the difference between me and everybody else, you know? So just to like give you a quick list of how deep this can go, we got open, high, low, close. I'm looking at my piece of paper. We got price levels that I need. We have the concept of balance and imbalance. We have break and retest, the cover. We have liquidity. We have market cycles, something people don't spend any time thinking about. Market cycles, and this falls in the realm of timing. Um, Storytelling, bro. Like tell a story about what you see on the chart. You might not even need to, you know what I'm saying? And then after all of that, then we start to dip into like a whole bunch of like tips and tricks and strategies, you know? But each one of these seasons of information, they get broken down like this. So open, high, low, close, all that falls under there. Price levels, support, resistance, supply, demand, fair value gaps, fair value areas, order blocks, all of that stuff, all that's price levels, decision levels, external market structure, internal market structure. Uh, all of that falls in price levels, right? About I didn't even talk about premium and discount, right? Balance and imbalance. You know, that's going to overlap a little bit with order blocks and fair value gaps. There's just so much that we got to talk about, right? And then before I can even start showing like what do you call it? Strategies. You need to know all this stuff, and then even the strategies. You got ICC, ICR, Wicksauce. Um, well, this is really Wicksauce plus ICC, and then you have Wicksauce 2.0, and then you just got like basic price action, like um, what else is there? You got dip buy, dip buys. Then we have low hanging fruit setups, low hanging fruit. And so this is pretty self-explanatory. Low hanging fruit is supposed to teach you how to analyze market crashes. So it's just so much to talk about. But yeah, so anyway, finally I yapped my ear off and everyone's ear off until 9 o'clock. Now I'm done. Great day to trade.